Welcome to the Wednesday edition of the Tech Stocks Daily Podcast. Today we have sizzling updates from the Nasdaq that's guaranteed to pique your interest. We'll dive into Asana's post-earnings roller coaster, Google's game-changing collaborations and flashy Android upgrades, BlackLine's investor-centric moves at the Piper Sandler Growth Frontiers Conference, and Leidos flexing its muscles with killer growth stats. Stick around as we unpack why Asana's guidance missed expectations, Google is revamping Android, BlackLine's shaping the future of finance, and Leidos is crushing it on earnings growth. Stay tuned. It's going to be a wild ride. All right, folks, buckle up, because today we're diving deep into Asana, the work management platform that promises to keep your workplace chaos under control. Spoiler alert, today wasn't exactly as smooth as their project management tool. Asana's shares took quite a tumble following their fiscal second quarter earnings report for 2025, causing whispers and chatter in the tech world. Let's set the stage. Shares of Asana slide down by around 6.3% after news broke out. That's not the kind of sliding you want unless you're on a water slide, right? Currently, the stock is roughly 90% lower than its pandemic peak. Ouch. So what exactly went wrong? First, the revenue. Asana reported revenue of $179.2 million, up 10% year over year, which did beat expectations that were pegged at $177.7 million. Likewise, Asana experienced growth with customers who spend big bucks. Customers shelling out $100,000 or more grew by 17%, an indicator that Asana's appeal to high-value clients is definitely strong. Shutterstock images of pile-up dollar bills and corporate treasuries would fit perfectly here. But as any good chef would tell you, great ingredients don't necessarily make a great dish. Despite positive numbers in revenue and big spenders, Asana's financial picture wasn't all that great. Talking about losses, the company showed that its generally accepted accounting principles operating loss increased from $73.4 million to a gutsy $76.8 million compared to last year. The bottom line, Asana reported an adjusted per-share loss of $0.05, which, though better than the anticipated 8-cent loss, is still worse than last year's 4. And here comes the real kicker. Like forgetting to save your work, Asana's guidance moving forward didn't tickle anyone's fancy. For fiscal Q3 of 2025, they're eyeing revenue between $180 million to $181 million, which fell short of the consensus at $182.3 million. Additionally, they adjusted their full-year revenue guidance, capping it at $721 million from earlier estimates of up to $724 million. Expectations hurt as much as stepping on a Lego in the tech world. That brings us to a bit of silver lining. AI strides. CEO Dustin Moskovitz asserted that the company did make significant strides in artificial intelligence and was excited about ongoing enterprise transitions. The hype about artificial intelligence flying everywhere is real, and Asana wants a big bite. Moskovitz remarked, "In Q2, Asana continued to execute on our enterprise transition and make significant strides in AI. We're seeing momentum in key areas, success in key verticals, and a record number of multi-year deals. However, rosy words couldn't plaster the hard facts. Single-digit revenue growth and continued losses aren't exactly stock market darlings." To top it all off, Asana also announced bigger transformations within its own walls. Sonali Parekh will succeed Tim Wan as Chief Financial Officer starting in September. A fountain of new leadership, new ideas, and all that jazz, provided it helps, of course. Sound familiar? Asana's the rock climber stuck halfway, resourceful and visionary, but still struggling to find that next stable grip to ascend. Investors are wary, and today's numbers didn't stoke confidence. Stay tuned and fingers crossed for those AI stretch targets and cost management plans. I hope Asana's next project is winning back some investor love. Hey tech enthusiasts, Google's making waves in the tech ocean today with 3 major announcements. Grab your popcorn because we've got everything from game-changing partnerships to snazzy Android features and the much-anticipated official drop of Android 15. Let's dive right in. First off, let's talk gaming. Always a fun topic, right? Bandai Namco, the folks behind the legendary Tekken series, have teamed up with Google Cloud to make sure Tekken 8 runs smoother than butter on a bald head. Yup, you heard that right. With tens of thousands of players throwing digital punches simultaneously, you need some serious back-end firepower. And Google Cloud brings exactly that, with its auto-scaling capabilities, global infrastructure, and even Spanner to ensure those high-speed matchups aren't stuck in a laggy mess. Their partnership ensures that Tekken 8's online community features and competitive modes remain rock solid and reliable, so you can concentrate on the important stuff, like delivering that roundhouse kick to your opponent's virtual face. Knockout move. Next up, ever tried to figure out the name of a song in the background without fumbling out of your app? Google heard our cries of frustration and hit us with the Circle to Search music search feature. Imagine you're scrolling through your feeds or navigating your apps, and suddenly you hear a catchy tune. With just a long press of the home button or navigation pill, followed by a quick tap on a music note icon, Google's music search swoops in to save your day. Not just identifying the song, but giving you options to watch the clips on YouTube and add those sweet tracks to your playlists, all without exiting whatever you're doing. They've also gone a step further with usability features. Google Maps now works offline on Wear OS watches, so you're never lost, even when signal bars are. And for those using TalkBack, Google's added snazzy Gemini model integration to improve audio descriptions. Finally, no more squinting at fuzzy photos. But wait, there's more. Google officially announced the completion of its Android 15 beta testing. That means Android 15 is ready for public consumption. The Pixel devices are the first in line, set to receive these updates in the coming weeks. The updates bring a slew of improvements, like satellite-based messaging, enhanced NFC support, and even theft detection features. Google's not just stopping at handheld upgrades. Tablet users, foldable phone aficionados, and multitaskers are in for a real treat, with optimized features tailor-made for larger and varying displays. So there you have it. Google is not only powering the future of gaming, but also revolutionizing the user experience across devices with slick new features and OS perfection. It's a tech trifecta that's sure to keep us all at the edge of our seats. Until next time, keep those gadgets charged and your updates pending. Hey, tech enthusiasts. Today, we've got some exciting news about BlackLine, the cloud-based financial operations management company that's lighting up the Nasdaq ticker. So let's dive in and see what's cooking in the world of BlackLine. BlackLine Inc. has announced that its management team is gearing up to participate in a high-profile investor event, the Piper Sandler Growth Frontiers Conference, happening in Nashville, Tennessee on Wednesday, September 11th, 2024. And talk about prime time, their presentation is set for 1 p.m. CT. If you're an investor or just a finance aficionado, mark your calendars, folks. Who doesn't love a good financial presentation, right? Now, I know what you're wondering. What's so special about this event, and why should we care? Well, first off, BlackLine's involvement in such conferences underscores their ongoing efforts to communicate their growth strategies and financial innovations to die-hard investors and the broader market. Basically, they're hitting the ground running to keep their stakeholders in the loop and attract even more backers. Sounds like a smart move, don't you think? Let's switch gears and dive a bit into what BlackLine is all about. BlackLine's platform is a beast when it comes to transforming digital finance operations, specifically targeting the office of the CFO. This is financial tech that's accurate, efficient, and dare I say, a little bit intelligent. Seriously, we're talking about a comprehensive platform that handles everything from record to report to invoice to cash processes. Think unified and accurate data, streamlined processes, and real-time insights, thanks to cutting-edge visibility, automation, and AI. And they didn't stop there. BlackLine offers continuous transformation. That means immediate impact and sustained value for businesses. It's not a one and done. It's a let's keep improving kind of deal. With over 4,400 customers across a multitude of industries depending on their innovations, BlackLine's track record speaks for itself. They bask in industry-leading R&D investments and world-class security practices, making many CFOs sleep just a little bit easier at night. But let's rewind a bit and go back to the investor conference at hand. BlackLine has this webcast all set up for you eager beavers out there, available through their investor relations website. Transparency? Check. Accessibility? Double check. If you thought financial transformations weren't sexy, BlackLine might just change your mind, one AI-driven report at a time. So to sum it all up, BlackLine's participation in the Piper Sandler Growth Frontiers Conference is poised to shed more light on their ongoing financial wizardry and strategic future plans. It's not just a snooze fest, it's a peek into the future of digital financial operations. Stay tuned, lock in the date, and maybe keep some popcorn handy for 1 p.m. CT on September 11th. Financial Theater, here we come. Today's techie tidbit is all about Leidos lighting up the Nasdaq news with those juicy growth stats that have investors reaching for their wallets. If you've ever wondered why Leidos is making headlines today, stick around because we're about to break it down in a way that even your grandma who thinks Wi-Fi is a fancy new diet will understand. Leidos, if you didn't know, is that powerhouse in the security, engineering, and technology services game. According to the Zacks Growth Style Score, which dives deep into how companies fare in terms of growth potential, yada yada yada, Leidos is currently nailing it. Our pals over at Zacks have given Leidos a rank number 2, essentially saying if you were ever surfing the stock market waves, Leidos is your board. So why is Leidos the star of the show today? Let's break it down. 1. Earnings growth. Investors drool over surging profits, kind of like how you drool over the latest iPhone before realizing your bank account isn't matching your enthusiasm. Compared to the industry average of an 11.9% growth rate in EPS, Leidos is flexing with a projected 22.7% EPS growth for this year. Yep, you heard that right. Double-digit dominance. 2. Cash flow growth. For any business, money is oxygen. For growth companies, a bump in cash flow is like finding free dessert. You'll take it without question. Leidos is rolling with a year-over-year cash flow growth of 55.5%, outpacing the industry average of just 6.6%. Historically, we're talking about averages of 15.8% annualized growth compared to the industry's 6%. It's almost like Leidos got the cheat codes for cash flow. 3. Earnings estimate revisions. Now, numbers nerds will tell you that upward trends in earnings estimates generally predict good things. Who are we to argue with the financial wizards? Over this past month, Leidos earnings estimates for the year have risen by 0.2%. So there you have it, folks. Leidos is offering the ultimate trifecta: staggering EPS growth, solid cash flow metrics, and positive trends in earnings estimates, all wrapped up in a stock that's ready for some action. Now let's hear from you. Do you think Leidos is going to keep climbing, Or are we looking at a peak before the dip? Do these growth metrics make you want to dive into their stock? Or do you have your eyes set on another tech gem? Hit up the comments section below and let's get the conversation buzzing. We're all here to learn, dream about those digits, and maybe even make a couple of bucks. Don't just watch the market, be part of it. Drop your thoughts below. All right, gang, let's spotlight Asana today and see if it's a hang tight steal or yeet out of your portfolio situation. So, given today's news, Asana's fiscal second quarter was a bit of a mixed bag, kind of like opening a box of chocolates and finding a few unwrapped ones. Revenue-wise, they actually did okay. $179.2 million revenue and 17% growth in high-paying customers sounds like a win, right? But, and this is a bug-squashing but, the company continues to bleed money faster than you can say, operating losses. Their GAAP operating loss widened from $73.4 million to $76.8 million, which is a hit for investors to swallow. Adjusted per-share loss came in better than expected, but worse than last year. Encouraging guidance didn't really guide us to sunnier skies, missing consensus estimates for revenue. Plus, they're under new leadership with Sonali Parekh stepping in as the CFO. Let's hope she's got a magic wand, right? They're pushing hard on AI developments, which sounds exciting, but you've got to wonder, where's the tangible return? So do we sell, buy, or hold? Okay, here's my hot take. I'd say hold. Here's why. Hold. Despite today's somewhat grim financials, Asana is leaning heavily into AI and enterprise growth, which could mean good things ahead if they execute well. If you're already in the game, it might be worth hanging on to see how these strategic shifts play out, especially with big spenders still on board. There's cautious optimism nestled in there somewhere, kind of like the last good piece of holiday pie. That said, always do your own research before making any moves. The tech market can flip-flop faster than a fish out of water, and your financial situation might call for a different approach. What do you think? Are you holding out hope for Asana's comeback tale? Drop your thoughts in the comments, and let's keep this convo rolling. Wow, what a whirlwind of tech action on the Nasdaq today. From Asana's struggle with financial losses despite big revenue, Google's game-changing advancements and Android updates, BlackLine's investor buzz and financial wizardry, to Leidos soaring high with impressive growth metrics, it's clear the tech market is anything but boring. If you enjoyed this roundup, please punch that like button, hit subscribe for more tech goodness, and share the excitement with your friends. And don't miss out, come back tomorrow for another jam-packed update.